All right, ladies and gentlemen, I hope you had a wonderful day. I got another watch list for you. And even though we're getting off to a pretty decent start from the year, we're above some of those Christmas levels. China stocks are having their best year in like 20 years or something like that. It seems like nobody cares, or at least in the bond market. So we had the minutes today, and this is what this title is referring to. Even though the market moved a lot today in response to jobs data and the minutes, and we have a lot more coming up this week, the bond market is not budging, and you are starting off the year very strong, and it's actually one of the best starts here for the year. And depending on if this keeps continuing, the bond market is not changing its mind, and I hope you've been paying attention. But we have a lot to go over. We had data in the morning. The jobs opening was bad. The ISM numbers were also bad, but prices paid managed to plummet by a lot. And even then, this morning, if you even go look at pre-market, we were doing pretty good. You could kind of see how it compares to the range of yesterday, but French data ended up coming in good on the inflation front. And if you remember last week or to start this week, even German data, UK inflation data, all of that has been looking good. So the prices paid was kind of bullish. We had our own little reaction today, but an initial negative reaction off the jobs. Things bounced up. We got ready for the minutes, and then borderline, you did nothing after the minutes and pretty much stayed within the first 1 minute candle. So we're going to talk about it. Here's a spoiler alert. There was pretty much nothing from the minutes, but now we have big jobs data tomorrow and then even bigger jobs data on Friday, and I got a little bit of a breakdown for you. So we got a lot to talk about. I got the plays. I got the keys. We made a bunch of plays today, was able to take a lot of profit as well, and I actually got a couple plays that I'm interested in, and hopefully you watch yesterday's watch list because those events today, they hit, and we got a couple more conferences tomorrow, so I hope you're ready. Run it, baby.
Walking to the couch, it's a 2020 election. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
But right off the bat, like I said, the minutes didn't really prove anything. It was slightly more hawkish than the Fed meeting, and one thing we were looking for was, were the minutes going to be different than what Powell said? And really, it wasn't. And the market has already moved down a lot since the Fed meeting, and this was pretty much the main headline or something that was new. The Fed said that they are worried about unwarranted loosening of financial conditions, aka the rally we had coming into the Fed, this little pop leading into all of it. The Fed didn't like that, so keep this price in mind. But now, considering you're about, what, almost 20 points away from that, 30 points away from that, it kind of had a different effect. That's one thing I said today. It was slightly more hawkish than the Fed, but if we were trading at like 410, 415, it would have been a big day today. But the only thing that was new and really could have brought the markets down, well, the market has already brought itself down. So it's kind of a catch-22 there. And then on top of it, there was just simply no clues as to the size of the next rate hike. And that is what we were looking for today. And even the bonds, the Fed futures, they didn't really move anywhere in that direction. And if anything, the 10-year bond, it has been staying up even without all of that. Even though you see how the market moved, really, after the release, the bonds were kind of a little bit more stable and were pointing positive, but they were positive all day. So the minutes didn't give us much, but now this is going to make tomorrow that much more important. And now that is your second key. You're going to be getting the ADP employment numbers, so how many private or payroll hires there was, and then the jobless claims tomorrow. So the jobless claims is going to be a big one. However, I just don't want you to forget, Friday is even bigger. I know we keep saying jobs report this, jobs report that. There's a bunch of metrics. The ADP, private payrolls, it comes out before the non-farm payrolls, and then jobless claims, you actually get that like every week or every other week. But now non-farms on Friday, that one is going to be the colossal one that we need to look for. So the breakdown's very simple. I thought I'd give you a refresher here for the year, and especially after the Fed and everything, it really does apply here. But if you get a higher jobless claims aka more people are filing for unemployment, the market will respond to that bullish. And if you get a lower ADP private payroll hiring, that will also be bullish. Anything to the contrary, the opposite, that will be bearish or bad for the market. Now, one thing I want you to keep in mind, we bring this up a lot, the ADP is actually less important than the jobless claims, even though you don't get it as much. And then one thing to keep in mind, the ADP expectations is already a low number. So maybe there will be a big surprise. And if there's a big surprise on ADP tomorrow and the jobless claims even come in a little bit higher, a big surprise could confuse things because pretty much expectations are already pretty low. So keep that one in mind. But tomorrow, 1 hour before the bell, we're going to be watching for this, and this is going to set everything up. And then 15 minutes after the bell, you're going to get some PMI numbers. And just like today, just look for any prices paid or a price metric. Other than that, I don't think it'll move things too much. And the big thing will be react to the jobs, and then everyone's going to look for clues there to start getting ready for the non-farms tomorrow, and the non-farms should bring about bigger bond moves. So that is key number 2. And finally, coming into key number 3, this is something I said after Powell. This was my initial assessment, but after hearing the minutes, seeing how the market's been moving, we've been getting decent volume, but you've actually been getting big data reactions. It's even been a pretty awesome time to trade, but the data is going to be much more potent, aka ADP can have a bigger effect tomorrow. Jobless claims, you may see a bigger reaction depending on the number, but people are sensitive to that. Depending on what's in the ISM, that will be key. And now ultimately, that non-farms tomorrow will be very important, but in the name of the minutes and what we kind of learned today, that claim about unwarranted loosening of financial conditions, I really think this is saying that, hey, the Fed does not want the market above 410 without another lower set of CPI and bad jobs. So I'll just tell you right now, if CPI next week, if that comes in too high or it doesn't decline like the last 2 months, I don't think we're going past 410, and even if we do, I think the Fed will be quick to bat it down. And same thing here with the jobs. If you get a big increase on the non-farms and it does not go down, that will mean maybe this little rally and how people are feeling this year, it could be limited. But granted now, the minutes still left the door open to that whole data volatility. The bond market and stock market are playing a game of chicken. So that being said, the market is probably going to swing very, very big on all of these data sets. So it was a pretty simple day. We had a lot to digest. Again, these movements, it's at least better than when the market is slow. But now all of these macro data sets, I really think that's going to be the big driver. And before you know it, man, you're going to deal with all of the data, CPI, non-farms, then earnings, and then Jerome Powell. So I hope you're ready. But let us get into the plays. So right off the bat, ladies and gentlemen, I got a couple of plays. We'll go over what I did today. I made a bunch of trades. It actually was a good day, but one I ended up adding, and I even took profits on my old Micron today, but I'm going with NVIDIA. I bought 50 shares of this today. I didn't go too big, but I plan on swinging this for a little bit, and I said here, just keep earnings in mind. Even though I'm just trying to flip it, if I get a good gain, I will take it, but I'm down to hold it for a little bit because earnings are along the way, and if you could get some runway, this could be good. But the reason why I liked it is that China chip news. So pretty much China said, hey, we're scrapping our domestic chip plan to support our chip makers. You know how the United States, we did that, build back with the Intel, yeah. You know, we did all that stuff with the Intel chips, and we're building all these factories, and the government's funding it. China tried to do the same thing, and then they backed out of it, and they said, we're not seeing anything out of it. It's causing the United States to sanction us more. Let's just say screw it, and they did, and that is very, very bullish for all of the chip makers here in the United States. So that ended up being very good. I like this news, but it may fade away pretty quick. Otherwise, we hope market momentum, data, and then ultimately earnings could keep it up. But I would definitely keep your eye on NVIDIA, and same thing applies for Qualcomm, TSM, AMD, and I'm actually still have shares of TSM and then still short on Qualcomm as well. So got a nice little balance. I even took my Micron today earlier, but we will see what happens. That is play number 1. Then play number 2, This one was kind of interesting. ACIW. It is like American Payment or ACI Payments or something like that, but they had takeover speculation today. Company declined to comment. I forgot who said they said it may be more likely, but one thing to keep in mind is that this company has been getting takeover speculation for the last 2 years. Starboard took a stake, and then they winded down. They added people to the board. It's actually been pretty big there, but the reason why I like it, I think it's just a very simple risk to reward play. So even though I bought it with a little bit of premium, I think I was like right here at like 25 something. It's like the stock doesn't really move much. So even from like 25 to 20 at the very, very low, and you could kind of see how it got pinned there. It's about $5, $500 on 100 shares, but take a look here to the upside. I mean, there's a decent amount of upside, especially if there is a buyout in place. So I like the price level. I like the risk to reward. We got the news pretty early, but it did jump up a little bit. But I am still holding that play. Definitely keep your eyes out for that one. And then finally, oh, don't forget this one. JP Morgan and Citi. So I'll start with Citi. If you've been on stream, we've been talking about how Citi has really been the value for bank stocks, but all of the bank stocks are getting off to a very good start this week. And one thing you got to keep in mind, JP Morgan, their earnings are next week. And if the banks keep continuing this early trend and start off the year good, especially with higher rates, that is going to be a very good sign. And I honestly think banks will be a market leader up until the Fed or the data claps it and warrants otherwise. But if this starts to keep going, this one could be a very, very good one. Maybe there's even going to be a play on JP Morgan right before their ex-dividend, but I would definitely keep this in mind and get ready for some of the earnings. But those are the main plays. As far as everything else, are we going to have to go back? Can you see them all? Let's see. I don't even know if they'll fit. Yeah. So, you barely could see them. So you're going to have to bear with me a little bit here. But as far as what we did throughout the day, I started off this morning, my Micron. I sold out my 200 shares at 53.50. Remember, I played this at the end of last year for earnings. Believe it or not, I even collected a dividend, and then it went up. I got $500 profit. I did lose like $100, $130 on hedging a put there during the event, so minus that there, but able to get a good profit on that. Then I bought 100 shares of Verizon at 40.70, and if you remember, we brought this up, and go to yesterday's watch list. There's more conferences tomorrow, even with the chip makers and all of that, but I said, hey, in the morning, we're getting into the event. I figured might as well, and sure enough, at 10 a.m. after the data and the event started, Verizon came out with a lot of guidance at that conference, and they were able to do pretty good. So that was the reasoning. I only made $26. It was $100 or 100 shares, and it is a very, very slow mover, but got that. My JD shares, I'm still getting clapped on the Yang. A lot of people brought that one up, so still down on that one, but remember, I tried to buy JD to hedge. Well, made a couple $100, sold out of that one, but I figured it might be time since I was down a lot more earlier. I wanted to try to rebalance and see if things could rebalance themselves, but took profit on that. Then the Microsoft play, remember we shorted that at the end of last year. Well, it dropped on a very rare downgrade, and maybe part of that theory of the names that were good getting sold off, but made another like $400 or $500 on that one. It was a great play. And then after the data, like 13 seconds after the data, I opened a play. 6 minutes later, I covered. I went short after seeing that the jobs data was bad, even though prices paid dropped, and that made me cautious. I was just saying, I got to play the bad data, the jobs data. It's important, and really, we got a market for it. I was up, or I was down $1,000, and then I ended up closing about 6 minutes later, made about $1,050 net profit. So got out of that. That one was cool. Then I opened up those 50 shares at NVDA at 143.91. That was after everything sold off, so that was good. Then I made a couple flips. I think this was like $200 on the MNQ. Then I did another one around here, and I had some old plays that I had to get rid of. It accidentally closed my other MNQ, so that one kind of sucked, but I still got one short. It was just the timing. I wanted to go MES instead of MNQ, but I just rode with it. But made about $300 realized on MNQ flips throughout the day. And then CHRS, remember this was a biotech. I was down 50% on it. They had the delayed stuff with China, and then people are still hyped up on it, looking for the next FDA day. It's been shooting up like 70% in the last couple days. So I got around 50%, took like 250 profit on, only 100 shares or so. So not too bad of a play. Then I closed out of my /6B. This is my Euro short. Remember, I had this from a while ago. I took a loss on the first one. This is the rollover. I made some of my loss back, so I got to close like it was like 2,500 or 2,900 900 realized, but I just wanted to hold my yen. And really, if with the yen and currencies and everything going forward, I don't think the yen, or I think the pound might even have some upside, so I just didn't want that one to hurt me, so closed out of that. And then that was my final MNQ flip on the day. And then ACIW shares 100 at 25.74. So those were the main plays as far as everything. I have nothing on here, so please hold. Okay, we're back. But here's what I'm holding, that ES. We were able to make a little bit back. Remember, we were down a little bit more, but going to probably hold this one until we get CPI next week and use any available cash to either exit or average down, but not too bad on that. The bonds came back a lot. Remember, we were down double this earlier, so this play is just big. That's why the loss is there, but pretty much 2 more good days. Well, we'll be back to break even on this one, but I still like the bonds a lot, and I am not the only one on Wall Street right now, so keep your eyes out for that. Then the Boeing and Lockheed absolutely smashing me, aka I went short on Boeing, long on Lockheed. Boeing kept squeezing. Lockheed went down. All around bad, but still going to be riding that one out there. Then there's the NVDA shares. Tesla still paying my child support, but we'll see what happens with it. Remember, I averaged down, right before it took that big drop. I'm going to wait till $100 or lower to average. Otherwise, going to ride it out for a little bit and just see if the market could even lift it up, but still riding that one out. It kind of sucks, but I'm totally fine dealing with it. It's just sad, bro. It's just sad, but there's that. The TSM, again, part of the chips. I really like those. I still have a Qualcomm short, and then why I'm putting up XLU. Remember, I called this one out. It didn't really move much, but industrials and the utilities are starting to come back, so this is something I may want to be adding to, but I'm going to be keeping my eyes out for that. But we still have a couple of others, again, down on the yang, even like the YCL, the yen player and the shares. That one's barely down. I'm going to be keeping my eye out for that one as well, too. And I still do have my yen play, and that's why I closed out the pound today, because I really just want to even add to this one and want to make sure that this is really the currency I'm focusing on. But yen going up could even lift up the pound. That's why I say, well, might as well be able to maximize the gains from here. But other than that, still just holding everything else. Again, I have like old Disney and Apple that need to come back, my old EWG insurance, and then a couple of random. Again, we closed out a CHRS. I tell you that one, yeah, that was that biotech one, and that's pretty much going to be it. But riding everything out. I like how I'm doing here coming into all of it. Let's see what the data brings. Get ready for the non-farms, and before you know it, man, the earnings and the big events. So stay in the game, and I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, baby, once you start climbing the mountain, you may realize how much further you have to go. Even from the bottom of the mountain, it may look a lot easier to climb, but Chatadonia, you climb one mountain, you realize how much work you got to do. Stay in the game. Pay yourself first in that 10%. But Chad, get your budget ready so you could last this whole year. If you are not seeing how much the data is moving stuff, it should motivate you to stay alive, because your opportunity is on the way. Oh, and you're made for it, baby. But I love you, Chad. Thank you for all of the support once again. I'm going to see you in the morning, bright and early. Not early tomorrow. If I do make a trade, I'll let you guys know in the chat, or I'll stream alert it out. Otherwise, we're going to be early for non-farms. So get ready, baby. I love you. You ready? Hey, man. Let's go. It's game time. Be smooth. Horn.